My dear children, in this module, we are going to study the important accounts to be prepared at the time of dissolution of the partnership firm. The important accounts to be prepared at the time of dissolution of the partnership firm are realization account, partners capital account, and cash account. Realization account is a nominal account which is prepared to record the realized value of assets and liabilities, and it is prepared to know the amount of profit to be distributed among the partners as profit or loss. In realization account, the first step is to transfer the assets of the partnership firm except cash balance and bank balance. Then transfer that balance on the debit side of the realization account. Then second step is to record or transfer all the liabilities except partners capital on the credit side as by concerned liabilities account. The next step is to record the realized value of assets. Enter that amount on the credit side of the realization account as by cash account. Sometimes a partner may take over any asset. In that case, the entry will be partners capital account debtor to realization account to make the payment of liabilities. Suppose the payment made by the firm, the entry will be realization account debtor to cash account. Sometimes a partner may take the responsibility to make the payment of any liability. In that case, the entry will be realization account debtor to partners capital account. The next step is to record the realization expenses. If the realization expense is met by the firm or make the payment by the firm, the entry will be realization account debtor to cash account. If it is paid by the partner or any partner take the responsibility to realize the assets and liabilities and make the payment of realization expenses, the entry will be realization account debtor to partners capital account. Sometimes there may be unrecorded liabilities. If there is any unrecorded liabilities given in the problem as adjustment, record that amount on the debit side of the realization account. The entry will be realization account debtor to cash account being unrecorded liabilities entered. The next step is to record unrecorded assets. Sometimes one or two unrecorded assets may be given in the problem. In that case, transfer that amount on the credit side of the realization account. The entry will be bank account debtor to realization account. After entering all these transactions, the next step is to calculate the profit or loss of the partnership firm. This is the amount to be distributed among the partners. If it is profit, enter that amount on the debit side. The entry will be realization account debtor to cash account to partners capital account. That profit should be shared among the partners in their profit sharing ratio. If it is loss, enter that amount on the credit side. That amount should be distributed among the partners in their profit sharing ratio. The entry will be partners capital account debtor to realization account. After preparing realization account, the next step is to prepare various capital account of the partners. At the time of recording transaction partners capital account, the first step is to record the opening balance on the credit side. If the given balance is on the liability side, that balance is the favorable balance, so enter that amount on the credit side of the partners capital account as by balance brought on. If there is any accumulated profits, that is general reserve, capital reserve or any funds or bonds, that amount should be shared among the partners. Enter that amount on the credit side of the partners capital account. The next step is to transfer the closing balance of realization account to partners capital account. If it is profit, enter that amount on the credit side of the partner's capital account as by realization account. If it is loss, enter that amount on the debit side as to realization account. After entering all the transactions in various partners' capital account, find out the closing balance of partners' capital account. Transfer the closing balance of partners' capital account to cash account. If there is any loan amount given in the problem, we have to open loan account and transfer that amount of loan on the credit side of the partner's loan account as by balance brought on. The next step is to close the partner's loan account, then transfer that closing balance to cash account. After preparing partner's capital account and loan account, the next step is to prepare cash account. It starts with the opening balance of cash account, opening balance of cash which is given in the balance sheet. Then enter all the cash transactions on debit side and credit side of the cash book. Some examples are on the debit side. The various transactions are the assets realized, then any unrecorded assets. These two items will come on the debit side of the cash account. Then transfer the payment of liabilities and unrecorded liabilities on the credit side. Then transfer the closing balance of partner's capital account on the credit side. Then transfer the closing balance of loan account on the credit side. After entering all these transactions, find out the total. The total of both sides should be equal. These are the important accounts to be opened and prepared at the time of dissolution of the partnership firm. Thank you.